think that we're starting to see those numbers that are going to create a need for the Federal Reserve to not be able to stay stingy and keep those interest rates higher for longer. So I do truly believe that we will see a rate cut come June. When they make that rate cut, that doesn't necessarily mean that mortgage rates are going to drop automatically. Like I said, in the 30 years that I've been doing this, many, many times when we see them cut the rate, we actually see our interest rates get worse. Interest rates do go up. Now, again, these are initial reactions, right? When I say that. So a statement comes out, a meeting comes out, a decision gets made, a press conference is held. There's knee-jerk reactions that happen within the market. And sometimes we'll see those interest rates get worse, maybe for a week, maybe for 2 weeks, maybe sometimes for longer. Sometimes it's a day or two, and then all of a sudden things start to settle down. But just keep in mind that just because there is a rate cut does not necessarily mean that mortgage interest rates are going to immediately drop with that rate cut. And the fact that they would hold the rate steady, and that is what's anticipated by at least 90% of the analysts out there. I do think that if they hold that decision and they make any mention whatsoever in the Federal Reserve press conference that it appears that there could be a rate cut coming soon, I do think that we're going to see a very good reaction in our rate sheets, and we could get a very quick knee-jerk reaction that could possibly put many of my clients that have been on the border of wanting to get a rate locked in, get a refinance started,